On team, it's Ricky with Learn Plan Profit. Hope that you guys are all having an amazing Sunday. Welcome to our Sunday Stock Talk. This is where we come together as a team and we break down the different stocks that you guys see value in. So hope that you guys learned something new. If you do, please consider dropping a thumbs up and subscribing. We have a pretty interesting week ahead, especially with up and coming earning reports. So if you want me to break down any stock, all I literally ask you to do is in that live chat, just share the ticker symbol that you would like me to break down, and I would be more than happy to do so for you. For those that are unaware of what companies are reporting earnings this week, we have companies like UPS, we have companies like Microsoft, we have companies like Meta, Shopify, Amazon, Apple that report earnings this week. I don't know if you've heard of any of them, but it's a very, very big week for earning reports. For those that are not aware of what that means, no worries, right? Everyone starts with not knowing much about the market, but let's change that. So when these companies report earnings, depending on expectations, so like let's say that, Apple's going to be reporting earnings, they have an expectation to make a specific amount of revenue, and they have a specific expectation of an earnings per share. If they miss their expectation, let's say that their revenue goal was, 100 billion, right? If it was 100 billion and they end up reporting 110 billion, they made more than they expected, so the stock should go up. Same thing or vice versa, right? If their expectation is 100 billion, but they make 90 or 85 billion. They still made a lot of money, but they didn't meet expectations. So therefore, the stock will most likely drop. That simple. On top of just the earning reports, there's guidance. There's a guidance call or an earnings call after they report, and they explain the previous quarter and what they have in place for up and coming quarters, right? That's where the guidance comes out. Sometimes the guidance is more important than the actual report itself. There's a lot of times that a company can report positive earnings, but their guidance is slow and or lowered for the next up and coming quarter, and the stock can actually drop. So the reason that this is so important is because, the market's very cheap right now, right? This is the NASDAQ ETF. This is QQQ. Right now, we're nearly at 52-week lows, right? If you look at this on the day chart based off of where we're at and where we were, right, at the peak at 406, the market's very cheap. We're retesting this same support range. A lot of people are getting very excited because hopefully the market can begin to recover. If you look into, I talked about this last week. If you look at the last time that the market had a bull run, it was actually during quarterly earnings. And it was, again, they were coming in better than expected, and or their guidance was not as bad as expected. And then the overall market began to go up. We've been selling off ever since then, making lower highs and lower lows. So one thing that we've been trying to preach is that it doesn't matter if the market is bullish, it doesn't matter if the market is bearish, there's always ways to make money, especially, right? I trade a specific pair of ETFs. When one goes up, the other one goes down. You don't have to do what it is that I do, but all I have to say is especially this week with Apple, with Amazon, with Meta, these are huge companies. Some of the most valuable companies or the most valuable companies that are publicly traded. The market will shift either in a positive or negative way. Your job is not to predict the future. Your job is to prepare for it. So whatever company you're thinking about investing in, look up when it reports earnings. Look up the expectation and just save the date, right? It's something that you can follow up with so you don't put yourself in an unfortunate scenario. So clearly the trend is down 100%. Lower highs and lower lows, right? I'm on track to have my biggest trading month in my life, and that's during a down market. I've been shorting more now than I ever have been before. I'm obviously trading with a lot more money, but even percentage-wise, it's a really great return. I just want to share with you guys, what's my focus for this week. I'm not going to be super aggressive. I'm going to be very, very selective. I'm going to try to not have any open position when these companies report earnings, and I'm just going to trade the reaction. This is something that a lot of people get confused, or like they think that they always have to be invested or have an open position because they hope that if they have an open position, they make money, right? But you have to think about it. Anytime that you have an open position, you're opening yourself to risk, not just potential profit. And my job, if I want to get to my goal, is not to avoid risk, but it's to manage it, right? And that's where, being more selective, watching my position size, being very selective when I step on the gas and I go fully invested in a position, making sure that direction is in my favor, and that regardless if it's bullish or bearish, that I never hesitate to lock in profits, and especially never hesitate to, manage my risk. So let's go ahead and start breaking down your top stock. So if you guys would like me to break down your top stock, literally just share it in the live chat, and I would be more than happy to break it down for you guys. So let's go ahead and get right to it. Again, overall QQQ market based off recent patterns, making lower highs, lower lows, moving average descending. So we're a little bit more on the overbought side, but definitely, right, if we report positive earnings, this could be something that could send us, above the moving average, which is pretty exciting. So, all right, let's go ahead and break it down. So people are asking about Tesla. Tesla is very, very oversold, right? So very oversold. Tesla reported earnings last week. Do I think that Tesla's cheap? Yeah. It hit lows of 202. Right now it's trading at 214. Huge upside potential. So if you look at this on the day chart, it's very oversold based off of recent patterns. It's kind of just asking that question, are you trying to make money right now? Then maybe Tesla's not going to be a stock that you want to take into consideration, because especially after this week, Tesla's already done reporting earnings. But something that you need to understand is that if Apple reports earnings, and Apple has the largest market cap, if Apple reports earnings and things go worse than expected, Tesla can easily drop. It can make new lows. So don't be surprised that if the market begins to drop, it will drag down everything with it, right? So the cheap can always get cheaper, and it's all about your intention. If you're trying to make money right now, ask yourself a simple question: is direction in your favor? And it's very easy to see that it's not, right? With that being said, I think that Tesla can be a great long-term investment, right? So not make money now, but your intention can be to make money later down the road, right? A couple months, maybe a couple of years. Right now it's trading at around $200 a share. This price before the split would be right around $600 a share, right? That's exciting for those that are not yet invested, because they can get it for a good deal, right? That's all I need to say about Tesla. It's done reporting earnings. It's very oversold. If you're trying to make money right now, probably not the best move. If you're trying to make money long term, could be very lucrative, right? Let's go ahead and break down the next one, Twitter. Yeah, why not talk about Twitter, right? So Twitter's just overvalued as of right now, in my opinion, because of the acquisition of Elon Musk, right? He's moving through with that acquisition, and obviously as that news came out, it just popped Tesla as close to $54.20 as possible. As if I'm not mistaken, that is the purchase price, or the price per share. So we're at that same resistance level of when we first heard of this acquisition, and you're going to most likely see a teeter-totter around this general area. But you have to understand, once that acquisition goes through, the stock will most likely correct itself, just like it did last time, and head right back down to $38 a share. At least in my opinion, I cannot see any form of recovery anytime soon, as we've seen it firsthand. If anything falls through, it sells right back off to its true value right now, which is right around $37 a share. So I would just be very careful, right? You can't be thinking about best case scenario when, it's very clear to see that the only reason that we are even trading up here is because of that news. Let's go ahead and do Exxon. So I appreciate you asking me to break this down, and hopefully we earn your thumbs up. Exxon Mobil, absolutely just an insane stock right now. It's a monster. When asking the question, if you're trying to make money right now, is direction in your favor right now? I think it's very safe to say that ExxonMobil is just an absolute machine right now, making higher highs and higher lows. Obviously, a bunch of oil and energy companies are milking it right now because oil prices are super high, right? Energy prices are super high. It's the sector in the CPI data report and the inflation report that has seen the highest increase of inflation, right? And they're slowing down production. So if anything, it's only going to get more and more expensive. So that's kind of another concern, right? If you're not worried about earnings, then just know that up and coming CPI data reports, known as inflation reports, should be very interesting with this slowdown in production, the demand staying the same. So we can see that right now we're at highs of 105. Again, direction is in the favor. Do I think that it's a super good deal? Definitely not, right? Very overbought, very overextended, a lot of pullback potential. But I think that this is great, right? You don't have to buy it right now, but if it ends up pulling on back, testing the EMA, testing the moving average, we've seen it firsthand where it pulls back, finds its support, and then begins to recover. Pulls back, finds its support, and then it begins to recover. This thing is so bullish. Obviously, all great things must come to an end, and this thing will eventually correct itself. But as of right now, oil and energy is just such a hot commodity that I don't see there to be an end anytime soon. So what's going on, Umar? Hope you had an amazing weekend. Let's go ahead and do NIO. So again, if you want me to break down a stock, just make sure that you share it in the live chat and that you drop a thumbs up. This is something where I'm not gonna agree with everyone, and I definitely don't have to. One thing that you will begin to understand, and that I respect, from everyone, is there's so many different ways on how to make money, right? The stock market is so big, so vast, and a lot of different avenues and outlets to be profitable. I do not believe in any companies that tried to copy Tesla, and the only reasons that they were valued this high is comparing themselves to Tesla or calling themselves the next and better version of Tesla. At that point, they're not doing anything different, right? NIO has been selling off ever since then, and as long as Tesla begins to struggle or continues to struggle, so will every other EV company. These companies are 5 to 10 years behind Tesla in the sense of demand, in the sense of where their technology is at, with production, everything, right? You have to think, they're making vehicles. Elon's been making vehicles for over 10 years. There's nothing special about that. So how long will it take these companies to be profitable, right? Because that was the concern for everyone in that space for Elon. And these companies are not even there, right? So these are, in my opinion, kind of like, because there's so many of these EV companies. There's NIO, there's Lucid, there's Rivian, there was Nikola. These are kind of like Hail Mary type of stocks where you just hope one actually hits, right? It's very cheap, very oversold, but the cheap can always get cheaper. And I think this year chart is a great example of it, where it just continues and continues to sell off. I think that if you want to go for that Hail Mary type of approach, all power to you. If you're actually trying to be selective, if you're actually trying to, not put yourself in a tough position where something can continue to lose you money, then, it's very safe to say that direction is not in your favor. It's been making lower highs, lower lows. It can continue to sell off. So by keeping it simple, we could reset our alerts. If it drops below 10, for it to alert you, and if it breaks above the moving average, actually indicating signs of an uptrend, then you can follow up with it. So, all right. Let's go ahead and move on to the next one. So we got NVIDIA. Let's go ahead and break down NVIDIA. NVIDIA's been going through a rough patch. NVIDIA and AMD. I feel bad for those two. With the whole, I'm sure a lot of you guys heard, but China, or the United States and the Biden administration put a ban pretty much, or a restriction for, any employee that worked at a chip manufacturing plant in China. They gave them a very short period of time where they had to quit their jobs and return back to the US, or they would lose their US citizenship and residence. Very aggressive move, but it was to try to cripple and really put a standstill in China's economy when it comes down, or China's production of these chips that they're trying to bring back to the United States. So it's just been bad news after bad news. And then restricting everything that comes from China in this sense. And I get the idea of trying to bring back jobs into the United States, but I don't know. I just felt like that was pretty aggressive. But NVIDIA and AMD are the world leaders, right, in chip manufacturing. If you believe in those companies and you see those companies to be something that can, do well over a long period of time, I would say that, again, it's kind of a Hail Mary type of approach because of how bearish it's been recently. In my opinion, NVIDIA and AMD I can't say that they're strong buys right now just because of the price point, because they've been cheap for 6 months to a year. It's been cheap. That's not the question, right? It just continues to get cheaper and things just continue to get harder for them, right? So the way that I would view it is I think NVIDIA and AMD are good stocks to watch. And once they actually begin to indicate signs of a recovery, that we can always revisit the stocks and just hold ourselves accountable to making sure that, week after week or month after month, we follow up with these companies and ask ourselves, are we missing out by not being invested? And once we actually are, right, once this thing actually begins to indicate signs of a recovery, how it used to trade, then yeah, I would love the idea of investing in something like NVIDIA and AMD, which again, world leaders in semiconductors or chip manufacturing. So NVIDIA is trash. Yeah, we have a lot of people that don't like them, but again, it is what it is. They are the world leaders, NVIDIA and AMD. They're both the world leaders in chip manufacturing, and there's no reason to discredit that. They're just going through a rough patch. So if you can see through that, I think it's a great stock to add to your watch list. Let's go ahead and talk about SQQQ. So a lot of people are bringing this one up. Now, one of the things that I want you guys all to understand is that SQQQ is the ETF that I trade that goes up when the NASDAQ market goes down. Is SQQQ something that you want to buy and hold for a long period of time? No, right? We talk about it in my Learn, Plan, Profit course, something called path dependencies and how it decays over time. And then on top of that, if you really think about it, markets always end up recovering. And if this is a bear ETF, this will eventually go back down. And it's just too risky, right? I think that SQQQ is a great way to be able to hedge a lot of your positions, right? But you don't need to be holding it overnight. You can day trade it. And I mean, it's very simple to understand. SQQQ goes up when the NASDAQ market goes down. And by you understanding that, is feel free to revisit this, right? You can revisit this anytime that the NASDAQ market is selling off. If we have an up and coming CPI data report, if we have up and coming earnings and you're like, hey, I think the market could drop, you don't have to buy into this right away, but you can consider it of like, I'm going to watch it. And if the market does begin to sell off, I can enter SQQQ. That's how I've made a majority of my money this month, by being able to short the market, being able to make money as the market drops. Again, a great outlet to try to make money for a short period of time. This is not an investment vehicle. If you suck at risk management, if you are often bag holding, just look out for yourself and probably don't trade this. I'm telling you this. I mean, I trade this all the time, but I'm telling you that it is a very risky ETF, especially if you're not the best at managing risk and or if you often bag hold, right? I just want to make sure that I look out for you, right? As a beginner trader, as a beginner investor, I want you to do what's best for yourself, not to put yourself in a worse position, Let's go ahead and break down. I wanted to do some of the companies that are reporting earnings this week. What do you guys think? I had the idea of maybe live streaming some of these earning reports. So on Tuesday, we have Google and Microsoft reporting earnings. So I find that to be a pretty big earning report, and it's going to be after market hours. And then we have Meta that reports earnings on Wednesday after market closes. And then we have Apple and Amazon and that reports earnings after the market closes on Thursday. So we have a stacked week. And it's up to you guys. I mean, if you guys get this video to over 1,500 likes, I would love to host maybe even every day, right? After the market closes, we can host those live streams and see how the market reacts based off of the different earning reports that are being released. You guys let me know. You guys can drop a thumbs up. Make sure you guys subscribe, and we can break it down for you all. So UPS, let's go ahead and break this one down. So UPS reports earnings today. Reports earnings on Tuesday. And if we look at it, very oversold, right? It's testing its same support, so it looks pretty lucrative. I would say that this is a big watch, right? The reason I say that is because, if you're part of my LPP team, we talk about the 3 stages of a reversal. This is a beautiful example of it in real life. Rejection, consolidation, and then when we break and make new highs, confirmation. This is kind of, the 3 stages, but we're in stage 2, working to go into stage 3. I mean, there's no confirmation right now. So this is why we set our alerts. And if we begin to indicate signs of an uptrend, then that's when we can follow up with it. But again, this week on Tuesday, before the market opens, UPS is going to be reporting earnings. You don't have to try to predict and be like, oh, I think it's going to go up, I'm going to go into it. You have to, you don't have to do anything, but I would like you to take into consideration and be realistic, where there's so much upside potential on UPS. There's so much upside potential. Why do you need to feel like you need to enter too early, right? Or before any indication of confirmation, right? There's something so beautiful about being patient and waiting for confirmation. You make it easier for yourself. It's still not easy, it's still challenging, but you make it easier for yourself when direction is in your favor, right? You will never be perfect as a trader. You will never be. But the goal is to learn from your mistakes. So if you continue to make the same mistakes over and over again, I don't know who it is that you are, right? I don't know the mistakes that you continue to make. But if you continue to enter before confirmation and it's been bad, and then you don't manage risk, and then that's been bad, or you don't watch your position size, and that's bad, those three things right away are something that can really shift or really change the direction of your trading, right? But it's all up to you. You need to hold yourself accountable. You need to be an adult. You need to stay disciplined, stay structured, and make sure that when you take action, that it actually makes sense, that it's not just based off of, something you hope. So, let me go ahead and I'll break down two more stocks, and then I will wrap up. I'll wrap it up. So, here we go. So ever consider futures trading? You may be more powerful since you're always gaining. No, I feel if you really think about it, even Friday is a great example. On Friday, I stopped trading pretty early on, and I locked in profits when I had my $22,000 day. I often find myself, and again, I can't speak for you guys, but I often find myself that the more I overtrade, it's not the more money I'll make. That's when I get into those red days, or that's when I really open myself to risk. I find myself to be the most successful, or to see the most success, when I'm super selective. And even like on Friday, where I locked in profits right away, and I can always look back and be like, whoa, I could have made twice as much as what I actually made. But again, I will never be perfect, right? There's something so amazing about being selective and locking in profits, and then just knowing I don't need to trade anymore, right? I just wait for the next opportunity. So I often find myself that if I continue to trade, I'm only one trade away from a bad one, right? And that's where I can get into trouble. All right. Let's go ahead and break down SPY. I love to break down SPY. So SPY has to do with the S&P 500. Right? So when this thing goes up, so does when the S&P 500 goes up, so does this. On the day chart, obviously very oversold, based off previous patterns, huge upside potential. One thing that I like to pay attention to is this moving average. I feel like it's a great indicator for true direction based off of recent patterns. And we can see that direction is bearish, right? If you were to put an arrow at the end of this, what would it be pointing, up or down? Down, right? So lower highs, lower lows. It is oversold. There is some upside potential. This week will determine if we end up actually going up. But one thing that I want to point out is this resistance again at the moving average. We've been making these lower highs, lower lows. I cannot stress enough, technical analysis, it's great, it's fine. It's good to be used as a reference. I want to remind you that it's all dependent on how these companies report earnings this week. It's based off of their reportings that will either cause the market to break above or break below. I do not want to hear any excuses from any of you. These companies haven't reported earnings just yet. You have no excuse if you end up wanting to go long because you think the market's going to go up, or if you want to short because you think the market's going to go down. You can't predict the future, right? This is why we talk about staying cash and preparing for it. So for those that are choosing one side, I do not want to hear the excuse or the scapegoat of, oh my God, the market's rigged. Oh my God, why the market shouldn't be dropping or making new lows, or the market shouldn't be recovering. Things are not getting better. It doesn't matter what, there's always money to be made as long as you focus on one thing, and that's direction. So if you are choosing in advance to hope that it goes in your favor when there's no confirmation of that, that is simply the position that you are putting yourself in, okay? So there's nothing wrong with having an open position, and the market could sell off and it could be against you, but you control your position size. Instead of being 100% invested when direction isn't even in your favor, then maybe reducing it to something that is easier to tolerate. So let's go ahead and, so the Fed doesn't want the market to go up. Yeah, I mean, I hear it all the time. We're like, oh, the Fed, it's rigged. And that people just use any excuse to like feel like a victim of the market. But guess what? There's a lot of people making money as the market goes down. There's a lot of people making money that when it goes up for a short period of time, they make money on that side as well. It's your inability to be on the wrong side of a trade. It's like, that's not the market's fault, that's your fault. The market is uncertain right now, right? It's choppy. Everyone knows that. So why are you trading so aggressive, right? Why not stay cash, or why not reduce your position size? These are all options that we have. You're the one that's choosing to be aggressive when it doesn't really make sense to be aggressive. You know what I mean? Do you go live during pre-market? I do not know. I go live during normal trading hours. So when I trade live in the morning, I trade live right at market open. And I trade live from anywhere from, 30 minutes. Last week I did up to 2 hours or an hour and a half. And yeah, I go live every single morning, right? So it's not just once a week. It's not just once a month. I go live every single day the market's open. If you want to learn more about it, the second link down below, we're running our biggest discount. You're welcome to join if you want to watch me trade live. If you can't afford it and or you just aren't there yet, no hard feelings. I'm not here to convince you, but if you want my time, if you want to watch me trade live, if you want to work with me on a closer basis, that is literally the only thing that I offer, and it's the second link down below. So yeah, and if you join tonight, you can watch me trade live as soon as tomorrow. Would you please look at APRN? Let's go ahead and do it. What's going on, Evan? So APRN, we got Evan Collins. What's up, my guy? So I would not be too excited about this one as of right now. So it looked very overbought, but if I look at its overall true direction, it's very easy to see how inconsistent this is. I hate trading companies like this, where it's super overbought. It looks like it got pumped and then it sells off for most of the time, right? Then it pushes and then it sells off. Pushes and then it sells off. And yeah, it's oversold enough that it might begin to recover. You can set your alerts. There's no reason to try to predict the bottom of a stock when you don't need to. Keep it simple. There's huge upside potential. I mean, this thing has to be 300% ROI that it might offer 200%. There's no, why are you in such a rush to try to nickel and dime an opportunity? You know that these don't last, right? And when they do, you could get in super late and then lock in profits early. But as long as you take action when it's actually when direction's in your favor, at least you're being proactive about it, right? You're taking advantage of a bullish opportunity, not bearish hoping that it's bullish. And I think that's a big difference. Let's go ahead and do one more breakdown. So we have, let's break down Apple. Why not, right? I saw one of you guys asked me to break it down, and why not break it down when it's about to report earnings? So Apple is, again, one of the companies that's one of the most valued, highest valued companies or one of the largest market caps. Hit highs of 182, overall lows. It nearly made a full recovery back in June to July, and then it sold right back off, right? We're retesting this 130, 140. We're testing this EMA to see if we are going to begin to break above. I think this week will really determine if we actually begin to recover or if things begin to go south. I think this week will be the week where we will see confirmation. I mean, this is as big of the tech stocks that we get, right? I think that we could have a rally, and again, Apple likes to do its own thing. And I think it will all be based off of how it reports earnings on Thursday. Like, this is a very significant week. If there's ever been a week for this month of earnings, this is the week. And it's mainly because of Apple and Amazon and Google and Microsoft, some of the most valuable companies that are publicly traded. it's this week. So if you're in it for the long haul, I think Apple's a great investment. Do you need to make money right now or anytime soon? Probably not, right? Even if it does begin to recover, it's still going to take time. And things can get worse before they get better. So Apple's just one that anytime that it gets to the lows of 140, I just load up on Apple, and I love to add more to my position. So, but again, I have no intentions of trying to make money right now with Apple. I know that it's a long-term play. So let's hope for good earnings. Let's prepare for good or for bad. It doesn't matter, right? There's money to be made on either side. So I'm not here to hope for anything. I'm going to leave it at that. So Brady football. What's going on, Jason? Football season is back, right? So I really do appreciate your guys' time. Again, I wanted to be someone here on YouTube that you guys could depend on and just keeping you up to date on economic reports and earning reports. And that's what I'm going to continue to do. Again, I would love to host these free live streams as these big companies report earnings. And all I ask you is to get the videos over 1,500 likes, right? So make sure you drop a thumbs up, make sure you subscribe, turn on those post notifications, and I would love to keep you up to date on everything and anything stock market related. So if you have any questions about what we talked about today, feel free to send me a direct message via Discord. That's the first link. Or feel free to send me a direct message via Instagram, and that's that third link down below. Friendly reminder, I do not have a Telegram. I do not have a WhatsApp. I've seen these fake spam accounts now trying to use a fake email. My team will never message you. My team will never email you. We never reach out to you first. If you reach out to me, my accounts are verified. Message me on Instagram, it's a third link, or message me on YouTube, and you can see the verified checkmark. There are so many fake accounts. I will never message you first. I will never ask for money. I will never ask to trade for you. I don't do anything like that. Let me be very clear. The only thing that I offer is my Learn Plan Profit Group. It's the second link in the description. That is all. I offer nothing else. I offer no assistance in any other form of way. If you want to work with me on a closer basis, if you want to watch me trade live, I offer one thing, and it's Learn Plan Profit 2.0, and it's the second link down below. So I'm excited for this week. I wanted all of you guys to be aware of how big this week is for earnings and the different companies that make up this big week. So I showed you firsthand in advance. Now it's all up to you. I'm not here to ever tell you what to do. I will never tell you what to do. I'm here to make you aware, and I want you to make a decision like an adult, right? To prepare always for worst case scenario. And it takes discipline, right? There's a saying that it's like, my job is simple, but my job is not easy. There's a big difference. And I think that really, explains, or is a great example of the stock market as well. The stock market is very simple, but the stock market is not easy. So I'm excited to experience this with you guys. I hope that you guys are too. Hope that I earn your thumbs up. Hope you guys consider subscribing. And friendly reminder, our staycation giveaway ends in 2 days, so on the 25th. If you guys want to enter our staycation giveaway, fourth link down below. Every dollar that you spend equals 5 automatic entries, and that's for shop.techbuds.com. So if you pick up anything like a mouse pad, it could automatically enter you as little as 150 times towards the giveaway. So the giveaway is we're picking 3 winners, an all expenses paid trip to Arizona with me and the team, and we have some fun activities planned for you guys. So again, that's that fourth link in the description if you want to learn more about it. I appreciate your time like always. Let's make sure that we end the year on a green note. Take it easy, team.